Welcome back to The Price of Business. I'm your host, Kevin Price, talking to you about you and your business, talking about the Society for the Advancement of Financial Education and so much more. I kind of dominated the first round with a very reasonable conversation about the Fed, and then it just kind of meandered into the weird world of Anthony Weiner. How about you? What do you want to talk about from last week's news that you're keeping an eye on this week?
Well, the big news, of course, hitting the economy was the situation in Detroit with the Chapter 9 filing by that city. What a tragedy it is to see a major city in the country shrink from 2 million people to 700,000 people and continue to make the mistakes that governments make. So their pension liabilities just so overwhelmed the city that it forced them into bankruptcy. And the reason it's relevant, I know in states like Illinois, where I live, a lot of public employee unions are in the same position. Whether you're a public teacher, a firefighter, or a police officer, you need to be conscious of where your pension fund is and make sure it has the money there to provide for you in your retirement. The second was the indictment handed down on SAC Capital. This is one of these hedge funds. Most Americans think, oh, that doesn't affect me. But it does. What you have is a situation where Wall Street regulation is going to be increasing, and therefore options to the investors will be decreasing. And that's driven partly by guys like SAC, where they just do engage in criminal behavior.
Yeah, absolutely. And that's interesting. You know what? That's something that got fairly minimal airtime. I guess it got lost with the Anthony Weiners and the royal family having babies and all those other far more important stories. But that's interesting. Talk a little bit more about that.
Yeah, what you have, SAC Capital has been around a long time. The guy who runs it, Steve Cohen, ran a very secretive hedge fund world in the 1990s. Myself and the guys in the industry knew of him. He ended up building a huge operation. I think he's walking away from this with $9 billion personally. But the indictments were handed down against all of the SAC advisory companies and two of the principals, or actually four of the principals. I think they'll see some jail time. And what they were doing was basically getting inside information and trading on that. And of importance to your listeners right now, Kevin, as they look out at what their portfolios have, you hear about investments all the time that have superior returns. In the SAC case, they were generating 30% of your returns. Well, that tells you something's going on. Markets don't return like that systematically. So if you've got an investment that's been proposed to you and it's got those types of return streams, you might think twice and say, how are they doing it?
Mm-hmm. Yeah, interesting. Tell me a little bit about that other news. Your thoughts on that, on unemployment numbers. I think people were shocked that our robust economy actually saw a bump in unemployment numbers. Talk about that.
Well, what we've got, unemployment is a screwy number to begin with. What they do in unemployment is you have what are called the U numbers. There's U1, 2, 3, up to U6. And in the U1 or U2 numbers, where the government uses those and they say we're at 7.8%, that doesn't include people who've quit looking, people who've fallen off the unemployment rolls, who aren't looking anymore. The real number, which is the U6 number, is more like 15% in our economy. And in the minority communities in the cities, it's upwards of 50%. So unemployment is still there. The economy is not recovering robustly. It is recovering slowly, but that's a function of these interest rates. And as now the world starts to look at a higher interest rate environment, that will hit auto sales, housing sales, and durable goods orders, and that's going to slow the economy down from its currently anemic 1.5–2% growth rate. So I don't think we're going to see a booming economy anytime soon.
Yeah, and you begin to get the impression it's almost part of a plan, because all this administration does is continue to put barriers up there. He's made it perfectly clear his core constituents are the mega wealthy and the mega poor, and it seems like all of his economic policies only benefit those two groups.
Well, Kevin, it's a sad fact that in 1946 and 47, if you looked at the structure of the American labor force, the vast majority of people worked in companies with less than 50 people. You go today, it's the exact opposite. And if you study the middle class syndrome in the United States, you find it was a function of small business. Well, what they're doing in Washington, to your point, is they're so supporting the mega businesses, they're over-regulating and eliminating the small and mid-sized businesses. And that's going to create a problem with the middle class. We will end up much less likely to have a robust middle class without a robust small business sector.
Yeah. No question about it. That's where it's built. And, the argument that the big businesses have is, hey, we just want the same, people don't realize it. Business is lobbying for many of those regulations. Big business. is lobbying for those regulations as a form of protectionism against small businesses.
That you're exactly right, Kevin. They're looking for a monopoly, and I can't blame them. If I was in their position, I'd do the same thing. But the legislatures that we have in Washington have no backbone and aren't able to stand up against it. And as a result, we're forcing more and more money into the large companies, fewer and fewer dollars into the small companies, and that will hurt the middle class. In fact, in my book, The American Dream Under Fire, a core driver of that book thematically is the transition from a risk-taking entrepreneurial society to a more mature, if you will, grandfatherly society where everybody sits back and feels entitled to have a pension.
Yeah, very sad. All right. His name again, of course, is Steve Beaman. He's with the Society for the Advancement of Financial Education. Give that website one more time. I want people to check out the new website.
Yeah, come and join us at safesociety.net. We offer absolutely free memberships to people coming in. There's a short video there that explains that. But come on in, join us, and help be part of a positive solution to the national issue of financial literacy.
All right. Thanks for being with us. When we come back, we're going to have much more for you. And I'm Kevin Price. You're listening to The Price of Business.